Good morning and welcome. Happy Friday. Patriot Radio News Hour. Joe and Jason. It's going to be $3,300 this year. It's almost $3,300 today. It's going a lot higher than that. Don't wait here. I mean, already, think about this. January, it was $2,700. The gold's up over $500 already this year. This is a situation where, once again, we have issues in the U.S. bond market again this morning. You know, yesterday I was warning you about this auction. The auction actually was okay last night. I was pleasantly surprised. I was like, oh, okay. You know, that's not horrible, and something very key. And I don't know that people highlighted it, but I'm going to highlight it to you, that Scott Bessent, the Treasury Secretary, is now in charge of these negotiations for these tariffs. So he went from not involved at all, right? And when you think, well, this is trade, we've got a trade representative, right? That's his job, right? We literally have people whose jobs it is to do this. Nope. Let's get the Treasury Secretary to do it. You know why? You know why? There are major issues going on much deeper than, you know, and I've been watching TV, like, hoping that they would tell you the truth here, and you get a tiny sliver of it, but they just want to wash it. Let me give you an example. Today, the 10-year note is almost at $4.60. What? Yeah, $4.60. The U.S. dollar, which again, when you have yields rising, the dollar's supposed to get stronger. The dollar is getting jackhammered right now downwards. This is something where the flight to safety, okay, we see this time and time again, right? They tell you this. Heck, I think they've written textbooks that aren't worth the paper they're printed on, that this is how, when it's uncertainty, everyone rushes to the treasuries and the dollar, right? Treasury yields. Now, remember the first few days of the crash, okay? What was that? Was that a week ago? Yeah, last Thursday, so 7-8 days ago, right? Last Thursday, I think it was. Remember the 10-year note dropped, right, below 4%. Heck, it was in the 3/8. Right? Okay, see, that's normal. That's how it's supposed to work. But guess what? All of those people, and it was probably computers, right, that did that, because, hey, that's what you're supposed to do. They just got massacred. And now the 10-year note, literally, it's at the highest we've seen. Remember, we were freaking out when the Fed kept cutting rates and the yields were going higher. We should have realized then that there was a problem. And today, we had bank earnings out. They were okay. They weren't great. You know, J.P. Morgan, you know, they beat the numbers. But when you looked inside, they missed estimates on a lot of stuff. J.P. Morgan, the big thing there was loan loss reserves, where it was up over 30%, a huge rise in loan loss reserves. And then, of course, Jamie Dimon, you know, he probably listens. You know, I probably doesn't. I'm probably, he's a smart guy. He's telling everybody today what I was telling you. Hey, guys, they haven't even started to bring down these earnings estimates. Jamie Dimon today said, listen, stocks are going lower. Why? Because all these companies, we got to lower all of their estimates. We just don't know how much to lower it yet, right? We don't know how much. On top of that, Larry Fink, BlackRock, he thinks we're in a recession already. He believes that. I don't know. I haven't seen that, but that's what he's thinking. He
compares this time to to 2008.
Yep.
He says this feels like 2008 when things were getting going.
Listen to that. Listen, they don't say things like that because, right? They're not, they're not me, right? They're not alarmist, right? They're not always, most of the time you hear Larry Fink telling you how great everything is. He's telling you big problems in the plumbing of the financial system. On top of that, China responded the way we thought they were. We'll tell you about that when we get back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Friday. And boy, so much every single day happening right now. The Dow down. It's only down 250. I mean, that's like a calm market now, right? We've only had the markets move about 500 points total today. It's kind of insane. The volatility just is amazing here. The S&P's down 30. The NASDAQ down just under 100 points. As we told you about, the 10-year note just absolutely skyrocketing here. And again, we were warning you about the hedge funds. Matter of fact, a few weeks back, I told all of you that the primary dealers wrote a letter to Jay Powell and said, dude, right? I don't know if they said dude, right? Probably not. They probably didn't say dude. Dude, what are you going to do about this? They're over leveraged, and it's going to be a huge problem. Matter of fact, they said, please put plans together to bail out the market. That's what they said. What did they do about it? Well, the same thing they normally do. Nothing. It's coming. And there's a reason why the Treasury Secretary is now in charge of the trade negotiations. Yeah, maybe the deal's just going to be, okay, well, will you please buy treasuries for us, help us? Oil flat today. Gold. TV gold up $75, $32.52. TV silver up $1.40, $32.15. I'll just say this: spot gold up $30, $32.28. Spot silver up 92 cents, over $32. How much longer are you going to wait to get diversified? That's what I want to know. I want to know. What more? Oh, wait. I want to see what happens. Okay? Jamie Dimon and Larry Fink told you today what's going to happen. What did Jamie Dimon say? Oh, well, all these Wall Street estimates, they got to come way down. Right? Jamie Dimon wasn't talking about, they got to come down, maybe 1%, 2%. No, way down.
For some people listening, if you listen to Joe every day, right? He's doing this show. He does the monster load of the work on this hour, and I try to add my side of things, my observations. But I was watching Joe 2 days ago, and Joe's here every day, and he's like, bond market, 10-year note. He's like, Joe hits this. For some people like me, and I'll just include myself, I had to learn how to work with this because this is not where my mind goes. But there's a reason Joe does what he does, because this is the best indicator. So, Joe, 2 days ago when the markets just shot up 3,000 points, and I went home and I was having my dinner and I clicked on some vids. I go to YouTube or some other places to look at vids for the economic stuff that Joe talks about. And I don't know if you know this, Charlie Gasparino. Do you know that name at all?
Yep. Yeah. Oh, yeah. He's a regular CNBC contributor.
He was on Fox.
Gasparino.
He was on Fox on Wednesday.
He's on with Maria Bartiromo now, and.
So he said, and Joe, and I don't know if you've mentioned this or seen this piece, but he was on Fox when the markets were coming back up to that 3,000 point. Remember, we had 1,600 points down on Thursday and then 2,200 points down on Friday. What's actually happening? And Charlie Gasparino was saying, look, it all comes down. I was watching the Jimmy Dore show, so that when Jimmy Dore, he doesn't do the economics. He's like, I don't really understand this. I thought it was about, the markets, but it's not about the markets. It's about the bonds. So they played Charlie Gasparino, and Charlie Gasparino said, look, well, I'll tell you what happened going into the weekend last week. We figured out that Japan's dumping bonds, and they were dumping bonds in a very scary way. He said it's not known for sure what they were dumping, but it was so bad that by the time we got to Wednesday, something finally, the whole, okay, we're going to hold 90 days. It could be simply that 3,000 point rise is because Japan stopped dumping. Now 90 days, they got to figure out how to make Japan happy. This is what he's saying, Joe. And it's hard to argue with that because we've talked about the big, huge, ugly gorilla in the room when it comes to the markets worldwide going down. Japan has, as much as nobody talks about them anymore, that they have a big role to play, Joe.
Well, they are now the largest holder of treasuries. But again, go right back to it. What are you doing? Honestly, all you guys, and I know people that with big money listen to this show. Why? Because they call them buy gold. What are you doing right now? Larry Fink comes on TV today and says this is the same setup during 2008. No, it's not. Is it the exact same? No. Right? But the feel. The fact now that I told you yesterday I'm scrapping my gold forecast, it's got to go way higher. Why? Because I told you, hey, I don't know if we got a month before quantitative easing has to make a huge comeback. And another bailout of the markets. There is one flight to safety. It's gold. That's your flight to safety. Period. And when you look at what the big money, the World Gold Council came out yesterday with this report after we got off the air, and Jason, they didn't even know what to do. Right? They called themselves the World Gold Council, but they hate gold. Right. They love the banks, right? That's why they did that up.
There's no safety, Joe. Look, 2008 was about MBS, mortgage-backed securities, and CDOs, collateralized debt obligations. That was something that they moved themselves out of and then printed up an incredible amount of money and kicked the can down the road. This looks like, Joe, as you've been saying year after year, this could be U.S. bonds are trash. If U.S. bonds are trash, if Japan selling in a major way caused this to go faster, let's say spurred by tariffs, Japan's like, if we're going to have the tariffs, well, we don't want to hold on to this stuff, then this is way worse than 2008, Joe. Can you imagine if these...
Oh, by far.
By far.
And it has to be, listen, you guys know this. The 87 crash, that was the worst since the Great Depression. Well, then it was, the dot-com bubble. That's the worst since the Great Depression. The financial, okay, that's the worst. And what, now this one. The crash hasn't happened yet. That went from 45,000 to 39,000. That's not a crash. Not yet.
And the COVID crash was worse than 2008. They just they doubled the money supply during a made-up pandemic so that when everyone was freaked out, they got their attentions. We'll just double the money supply. That'll do it.
Yep.
What are they going to do now? Triple the money supply? Are they going to triple the money supply means triple the gold price?
Yeah. The World Gold Council, like I said yesterday, came out with this report. They said gold demand, and you know what's so funny? They just said gold demand for the ultra-rich is skyrocketed, and they said it happened everywhere. ETFs, physical demand. North America up 68%. Europe up 30%. Then they talked about Asia. And, Asia, China, India, right? How about Japan and South Korea on top of China and India? Matter of fact, I've been doing this over 20 years. We've never talked about Japan and buying gold up until what? I think last year was the first year we even mentioned Japan.
Just look at gold. Gold is at $64 up. It's essentially $3,240. 16 months ago, at the end of 2023, Joe and I were talking 1,900 gold. We're fastly getting close to the end of 2023, doubling it to 3,800. And it really, with all the stuff that's going on with the tariffs, spurring very much a distrust of U.S. bonds, the safe haven, right, Joe? Yep. There's no other safe place to go. There won't be any other safe place to go if Japan's like, you know what, we got to get rid of this because we know where this is going. If that's what's happening, Joe, I mean, China's been selling off for a long time. They've been trying to unload.
Listen, Japan needs money, China needs money, and the bottom line is, hey, if I'm only going to get 4.6% for 10 years, screw that.
They're just looking at gold. You just look at gold, and it's like, you know what? Right. I'm going to get 10% a year after this thing, and I think I can get 10% or more out of gold for another decade.
Yeah. China, they responded, and they did what I thought they would do. They've raised U.S. tariffs to 125%. So we're at, 145? They're at 125. But then China did this. They said, given the current tariff level, there will be no market acceptance for U.S. goods imported to China. And from here on out, we will ignore any more increases in tariffs from the United States. So in other words, if Donald Trump comes out, so today, right, we'd all expect Donald Trump, okay, we're going to 200%. China said today, point blank, at 125% tariffs, every business in China will simply no longer buy U.S. products, period. So there's no reason for us to go any higher. It's already at the point of ridiculousness, and we're done here. And by the way, the message to all companies that sell to the Chinese, you're done. We're done buying from the United States. We won't buy at this 125% tariff. Jason, I think the farmers are going to need a bailout literally in the next 30 days. If this is accurate, which I'm assuming it is, that China is saying, we don't need to go any higher than this because at this level, essentially, we're done buying stuff from the United States. That's where China sits today.
Yeah, and China did say, well, if America raises it again, we're gonna stay where it is. But
right. Because it was a good point made here. Yeah. Hey, no company in China is going to pay 125% tariff to buy. We'll just buy from somebody else.
It doesn't really make that much of a difference anyways, because they could always raise it more later if they have to. I mean, we've already seen people, countries and Trump and these leaders make claims of what's going to happen, and then they have to pivot and change. So China could always raise it again. They shouldn't, just like Joe said, but they could do it.
I don't think people understand. Do you not understand this?
100% tariffs.
They literally just said No, we're not buying anything from America, period.
Right.
How long do you think that can last? How long? 800-951-0592. And again, remember, look at it. We have all these countries calling us. I already told you about these countries. They don't matter. You know who matters? China, Mexico, Canada, right? They matter. Oh, by the way, those are the ones that have the highest tariffs. Patriot Radio News Hour. We'll be back. 800-951-0592. Joe and Jason on a Friday here. Gold, as Jason said, up almost $63.
I got a gold comment. You know, a lot of people that have been buying silver, and I encourage buying a silver, but you have these guys on the internet, and they're talking silver's going to have its day, and silver's going, it needs to be 50 to 1 or 25 to 1. You know, what nobody's saying, and this is an economic situation, and let's just go with, Fink saying that this is like an 08 thing. If you have an economic disaster, don't you want to be in the economic metal? Silver's the industrial metal. What nobody's talking about, what if gold goes 200 to 1? Nobody talks about it, but that doesn't mean it can't happen. And what if gold goes 200 to 1? We have $30 an ounce silver and $6,000 an ounce gold. If things get really crazy, and let's just say bonds become acid, U.S. bonds, you could easily see a 200 to 1 gold to silver because people aren't going to worry about building stuff, Joe. They're going to be worried about financially securing their position. So maybe somebody should be talking about that.
Right now, it's 100 to 1.
It's 100 to 1.
Right, which is, yep. We hit an all-time high, what was it, during COVID, like 125 to 1. Way above the norms. I still say silver's a buy. Jason's right, it could. I think gold will drag silver with it.
Yeah, absolutely.
But it get used to 100 plus to 1 gold to silver right now, and I'll just tell you, run to the phone, run, and call, and do what you should have already done, because the bad stuff hasn't happened yet. This is the lead up to the bad stuff. Believe me, $20 gold pieces, 1 through 9. I'm going to put them on sale at $3,450. 10 or more, $3,425. Because I'm trying to entice you. If you want to do, orders, let's say 250,000 or more, call. We'll give you the best price that we possibly can. But you are out of time. So, as I told you, I'm raising my gold forecast. I think $4,000 now is likely. You remember when Goldman came out, was it about a month ago, and said, hey, gold could, worst case scenario, it could be 4,500. That is no longer the worst case scenario. I just know that. That is not the worst case scenario. We got updates on the debt from the Treasury. Now, the Treasury, we don't know what the actual debt is because we're in this emergency measure. I've already told you, we know it's over $37 trillion. We got the number from March. This was supposed to be spectacular. Why? Because March came on a weekend, so February, it's in the shortest month. February was an absolute, it was like the worst budget deficit in a February ever. Mostly because of just some timing. But let me lay it out for you. For the first 6 months, so remember, the fiscal year starts in October. The U.S. budget deficit grew by over $1.3 trillion. The second largest fiscal deficit in U.S. history, only worse than the year of COVID. And Jason, we are quickly getting ready to take out the COVID years without COVID. Obviously, if you did the math, you're like, well, guys, that could be $2.6 trillion. It could be worse than that. And when we look at everything, interest payments, we've broken a new record, $582 billion for the first 6 months of this year. The problem is, look at where the interest rates are. We will run interest payments this year, I promise you, somewhere close to $1.6 trillion just in interest. Right now, listen, the average interest was only 3.28. We're at 4.6 on the 10-year. There is a lot of trouble here. Remember, I told you yesterday, they are desperate to get some budget done before the Fed has to step in and save the bond market. This is what's coming. This is what's coming. I don't know that it can get done. I truly don't. Now they're talking about, can we get $5 trillion on the debt ceiling limit, right? Because they know, right? Jason, they already know. $4 trillion, by the time they get something done, half of the $4 trillion will already have been spent.
That's right. You know, we were talking a little bit about China, and you were talking about earlier this show that, you know, China's saying, well, we're going to raise the tariffs to this level, and then it just doesn't make any sense to do business anymore. Doesn't that kind of just go right in line with what we were talking about? That China has ways that they want to sell to others. Do you want to pay America 125% tariff, or do you want to just unload to Russia or unload to Iran, right? Yeah. That's what this is turning into. And there was a model made that China can absorb most of their production in their country. They can consume what they're making. And if China isn't anywhere near that position, they're in a good position to say, you know what, we're not going to pay the tariffs. And, man, why do you see the empty Walmart shelves in that situation, Joe?
Well, and again, China's saying, hey, all the stuff we buy from you, we can buy somewhere else. And by and large, that's true. It's not true the other way around, right? A lot of and we buy a lot from China. We can't buy it anywhere else because it's the only place that it gets made. Do you really think you're going to sew sweatpants? Really? You're going to make socks? Yeah. No, we're not.
And it's complicated, Joe. It's complicated. American so-called can't keep people from crossing the border. What makes you think America can stop China from sending its Walmart stuff to Europe and then coming in with the smaller tariffs? I know that there's ways of finding that out, but you know these games are going to be played, right, Joe? It still will it cost China more than what they're paying, but it's not going to be 125%. This thing has just started. This thing's just started.
I'll just say this. Yes, you know, we need to knock the daylights out of China. We can. The problem is knocking the daylights out of them also means knocking the daylights out of us. I'm sorry, that's how it works. We'll be back after the break. Oh, I hope you get it. Do you get it? Get your IRAs moved over. Call us. Get them into gold as quickly as you can. 800-951-0592. And you know I don't say that lightly. $20 gold. Run to your phone. $34.50, 10 or more, $34.25. You want to do $250, $500 million or more, call me. And we will sharpen the pencil. But get it done. For those you on the lower, 5-ounce silver bars, so $180. $180 on 5-ounce silver bars. We got silver dimes, $125. We got quarters at $2.50, half dollars at $2.55. 800-951-0592. You know what? 10th ounce gold eagle is $380. $380.
Yeah.
And you go, Scott, we're the cheapest. Yeah.
It's not even that bad if you think about it, because that's not even $4,000. I mean, you got $32.35 for an ounce of gold today. That's a record high. Times 10, if you were just at spot, that would be or divided by 10. That's $323, right? $324. But you can never get 10th ounce at that price. You're never going to get it for spot.
No.
So for $385,
they got the highest markups of all.
It's interesting, as gold gets higher, these 10th ounce gold eagles don't seem to be quite as bad, actually, Joke, as a percentage, right? But it's crazy that a little tiny dime of gold is approaching $400, Joe.
Goldman today. Okay. The equity market today is relatively calm. And that's relatively compared to what we've been seeing. The issue facing the markets is a loss of confidence in U.S. policy. That was from Charles Schwab. The abrupt changes in tariff policy have caused leveraged trades to become undone and has sent buyers to the sidelines. U.S. futures are fading even after the, quote, strong bank earnings today. Remember, and I told you about, they weren't that strong. They were okay. But woeful outlooks. See what the banks did? Hey, we beat. But by the way, get ready. Get ready. And J.P. Morgan, let's triple our loan loss reserves real fast. Shh. Hopefully nobody notices. I did. Goldman, the stock market is no longer in the driver's seat. U.S. dollar lower again. Treasury yields higher again is going to put massive pressure on the S&P over the weekend again. They said that all the buying seems to have disappeared, that the long market is frozen. By the way, this is J.P. Morgan. That means people willing to bet stocks are going to go up are frozen. The only buying seems to be coming from hedge funds, shorting, covering, then reshorting. In other words, the hedge funds, they're just making money on the way down.
Yeah.
Right? That's all they're doing. And J.P. Morgan says they're doing it over and over and over again. The dollar dumping continues to accelerate. Remember what Jason talked about? Japan is selling. China is definitely selling. I think everybody in the world may be forced to start selling. Gold soaring to new highs. Possibly the only hedge against the Treasury ledger. These are the things, the comments that are coming out of Wall Street today, and I hope you take heed here. Because, and I've told you this all week, and now everybody else is telling you, hey guys, they haven't even lowered all the company's numbers yet. And what Jamie Dimon said today is they're going to be a lot lower than where the stock market sits today, Jason. And that's why I said nothing is cheap yet.
stock market could easily go down 30 or 35, 40%. That's almost expected as to the trajectory of things. But we could see 50 to 75% with some of these guys are out there making projections, and they've been making them for a long time. But now, a broken clock is right twice. Well, at some point there was going to be market stress with the Tesla stock was, they don't even produce enough cars, and they were valued at larger than the top 10 car companies combined. That doesn't stay like that, and so there's a lot of room for these companies to just fall apart. There's supposed to be a value. A company has a value. A company is worth this much because this is what they produce. And stock markets are. I think this is why we have the age of Bitcoin. Bitcoin is just stocks that don't have a company behind it, and so you hope you have your money in the right place at the right time so you can grow it. I mean, that's where we're at. So, yeah, how much room is there to fall? 50% could be an easy number, Joe. Well,
I'll just tell you this. Tesla makes several car models that they don't produce in China. They make them here. They just informed the markets that they are stopping selling those markets in China because, well, again, they're not going to pay the tariff. There's a prime example of what we're talking about. We'll be back. Final segment of the week. Stay with us. 800-951-0592. Gold's up 65, 32, 42. Let's just say this. Are we going to have $3,300 gold Monday? It's not impossible to have it today. I don't know. Federal Reserve, Minneapolis Fed President Neil Kashkari. Rising bond yields, falling dollar shows investors all over the world are moving away from the United States. That was his comment this morning. Call, get diversified in a major way right now. 800-951-0592. $20 gold, 1 through 9, 34.50, 10 or more, 34 and a quarter. You want to do 250,000, $500,000, million, 2 million? Call me. I will sharpen it up, and we will get you squared away. You got big IRAs. Listen, you've already gotten your backside kicked in. Before it really reverts, get it into gold, get it into silver. We can help you do that. And by the way, did you know I don't do the lottery? But did you see this, the Mega Millions? It used to be $2 a ticket. Well, I guess like over the weekend, it's now $5 to play the Mega Lottery. Yeah, don't worry, there's no inflation, right? I mean, I remember a lottery ticket used to be $1, not $2. Now it's $5.
You see what's happening there, Joe? To get people to buy lottery tickets, you have to inflate the jackpot, and you can only inflate the jackpot because they know that's when the big sales happen. The big sales happen when the jackpot's big, right? Well, you can only inflate the jackpot if you inflate the ticket price to buy in. It's a really good indication of inflation, Joe. What did you say? How much is it? $5 a ticket?
$5 a ticket now for the Mega Millions.
Man, and then there's probably some option to $10 a ticket to double your winnings or something.
Oh, I'm sure. I don't know. I'm just like, man, what? Yeah, 800-951-0592.
You have to win the lottery to buy a lottery ticket.
I'll give here's another one. They're saying that they're going to see the first pro athlete making $1 billion before 2030.
Man,
what does that tell you about money printing and inflation and everything else? I know it's Friday. You're like, damn it, Joe, I want to enjoy my Friday. Well, I'll tell you what, you want to enjoy the weekend? Call us today, and you're going to enjoy your weekend. If not, you're going to worry because, let's face it, we got 48 hours after this. Who knows what's going to happen next, Jason? You know, we just don't know. And Neil Kaskari comes out on TV today and says, everybody's selling dollars. Everybody's moving away from the dollar. I mean, these are things central bankers aren't supposed to say.
And then all we can do is talk about this stuff with a little bit of humor, Joe, because when it gets really bad, if this is getting into a really bad place, Joe's going to get really serious. He's going to come on the air and he's going to get to this really serious tone, because once it gets bad, you get serious for a while, but there's nothing we can do about it. I'll laugh about this thing the whole way through. It's not Jason's fault if this thing's going to blow up, but I'm going to be here to talk about it with Joe. Someone's going to talk about it. Might as well be us.
I told you so.
I told you so.
I'm going to tell you. Told you so. God bless everybody.